Welcome to the 2023 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me on this June 13, 2023 Super Tuesday. We're going to be talking about inflation starting to level off, so that's some good news, but it's leading towards stagflation. We're also going to be talking about the meeting between President Biden and NATO leaders, and we can expect the Ukraine conflict to be lasting a little bit longer than anticipated, thus further hampering the ability of the U.S., UK, Eurozone economies to recover from the slight recession that we're going to be entering in the fall. Please be sure to subscribe to this channel for the latest interpretation of financial news that comes out as it happens, and I thank you for your support. I do read all the comments. Anything you'd like to see, any improvements, please let me know in the comments as well, and we will continue on here. Summer is about 2 weeks away, and so far travel season has been looking good, but as you know, CNBC.com is reporting that inflation rose at 4% annual rate in May. This is the lowest it's been in, quote, 2 years. The pandemic started 3 years ago. We're just now coming out on the other side of that. We're still not totally out of it, but we're getting on the light at the end of the tunnel. So the good news is that inflation is starting to slow down. According to the official numbers, we're still coming down below 8% as of this month for official numbers. Unofficial numbers still remain above 10 to 12%. According to shadowstats.com. So the consumer price index, that's the goods index that we sell here in the United States, increased just 0.01% for the month. So that's good. Now this CPI, of course, excluding food, it excludes food, energy, and stuff like that, and gas and stuff. So that rose 0.4 and 5.3 respectively. So the numbers were in line. So that caused another jump in the Wall Street today. The Dow Jones loves it. S&P 500, NASDAQ, everything was up today in the green. It was up yesterday in the green. So because now we have the meeting coming up with the Federal Reserve tomorrow and Thursday, June 14th and 15th, ironically Flag Day. And that meeting is going to determine whether or not they raise the rates or leave the rates unchanged. Now, I'm of the opinion that I'm about 50 to 70% sure that they're going to raise the rates, given the news of the economy, that they're going to raise the rates by 25 basis points again, or maybe even 50 basis points. So as you can see here, the change from year over the year, we moved up from 4% last year to 5.3% last month, and to 5.3% this month, as you see, as of the end of May. So now we have the UK wages rise sharply in April, set to bolster expectations of another rate hike. Once again, this is just what I predicted, and this is what I was telling you. According to U.S. News and World Report, the wages in UK nominal terms in pounds, sterling pound, starting to rise. So the Bank of England will raise interest rates once again next week. This is in sharp contrast. This is in sharp uniformity to the Bank of Australia, the Bank of Japan, which has already raised interest rates, and other banks around, central banks around the world. So this is UK is raising rates, and prices from the Eurozone in that matter, anywhere from Romania all the way back to Germany and UK. All of the wages and the banks have been raising interest rates. So this is in line with what we expected. And also, Biden and NATO's weak stance toward Putin emboldens, quote, China, North Korea, Iran, and Saudi Arabia. As you know, the BRICS nations are coming together to form their own currency to trade. Instead of trading in dollars, oil and dollars to petrol dollars, they want to come up with their own currency. And that's what the BRICS nations, the developing countries, are starting to come together. And this is really concerning, because we're going to be in Ukraine a lot longer than we anticipated, probably for the next 3 to 4 years at least, regardless of whoever wins the presidency in 2024. We're in it for the long haul. We're sending equipment there. We've sent over $39 billion worth of equipment over to Ukraine, defense equipment over to Ukraine so far. We haven't even got out of this. We've still got 6 or 7 months left in this year. So that tells you where we're going with this. This is a multi-year thing, just like Afghanistan, but this is totally different in the fact that other NATO countries are involved too, and well, as you know. And so this conflict is going to continue to go on, and it's going to continue to put an important barrier towards economic growth for the United States and Europe countries as well. But they're committed to it because, like I said, they believe, in the past, money has been generated through wars and all that kind of stuff. But this is a totally different ball game, as you know, because these countries, these developing nations, are a lot stronger. They have a lot more population. They're producing things that we can't produce over here at a minute's notice. Like I said, China, as you know, they can produce hospitals and build hospitals within the month. We can't do that. A bridge collapsed in I-95, a couple weeks ago. Well, actually, last week in Cottman Avenue, Philadelphia, for those of you familiar with that area. and it shuts down. We had a bridge collapse in Atlanta a few years ago on 85 that shut down, freeway. We can't just go and build a bridge in a week or two and be done with it. It takes weeks, if not months. And so they have the production capacity in Russia, China, India, these BRICS nations that are developing, Brazil, all these application nations are developing, and they're going to use that to counteract the strong dollar. Okay, and so for us, it's important that we continue to prepare while the dollar is still quote unquote strong around the world. As far as relative to other basket of currencies, every currency is sick right now, but the dollar is the strongest, sickest kid in the hospital right now. The least sickest kid in the hospital. So while the dollar is strong, and while the other nations are working toward developing their alternative currency, whether that's CBDC or whether that's some kind of digital petrodollar, remains to be seen. But they are working towards that. And once the dollar weakens, and America's credit rating weakens, it may not be overnight. That means that there's going to be less and less more disposable income for middle class Americans and everybody to enjoy the standard of living that we've enjoyed for so many years, over 100-something years, as a result of the dollar being the world reserve currency. So continue to be blessed, continue to prepare, because we're only in the third or fourth inning of this collapse and this transitional economy. Like I said, from where we had a service-based economy to a technocratic AI type of economy, where it's going to be totally different, and things that we're going to have to get used to that we thought were there is not going to be there for us any longer. So be safe, be blessed. I'll talk to you very soon on the next video, and thank you for your listening and support.